Hello and welcome to the Adansonia Global Opportunities Portfolio Update for October 2023. Our disclaimer, to move forward, I will take it as read. So the portfolio basically continued to perform well, and September was actually a down month as the market started to struggle with the prospect of higher rates for longer. In saying that, the portfolio outperformed by 30 bips, falling 4.1% versus the market 4.4%. At the moment, we're very happy with the way that the portfolio is positioned. It's outperformed strongly rising markets, and basically is providing defense in falling markets. The current portfolio has 14 stocks. In the pullback during September, we actually added a further stock to the portfolio called Brookfield Corporation, which is what I'll talk about in the next slide, being the feature stock for the month. We also deployed a bit of cash into the weakness. So we reduced our cash holdings from around 13% to around 6-7%. In the end, basically, as I said, the portfolio since inception has been returning 14.5% per annum compounding versus the market 10% for alpha of 4.5% per annum. So as I mentioned, the stock of the month is Brookfield Corporation. We bought this company because it's just outstandingly cheap, and used the weakness in the market to build a position. It's a real asset manager running an $850 billion portfolio that has a target of creating a compounding long-term wealth at 15% per annum, which is very much in line in terms of the long-term compounding philosophy, very much in line with what our company has. So we're very much in tune with that. As I said, $850 billion portfolio of real assets, and they're split up on the slide here. There's a $79 billion portfolio in renewable power, basically across 8,000 generating assets, totaling 31,000 megawatts of capacity. That's across all the major renewable fields, being solar, hydro, and wind, and transitional power. These companies also are separately listed, or some of these businesses are separately listed. This is a very, very simple overview of this company, which has a lot of moving parts. There's a $161 billion asset portfolio that provides good cash flow and stability. Private equity portfolio of $141 billion, where essentially the company is valuating to it through operational improvements. The company also has a large diversified real estate portfolio, where essentially it's got office towers in New York, London, Toronto, Los Angeles, and Sydney. It has landmark properties such as Brookfield Place in New York and the Bank of America Plaza in Los Angeles. It's a large portfolio of commercial space. And effectively, the company has been adding to that and taking contrarian view and basically building that portfolio in softer markets. It's got a credit business with $150 billion and an insurance business that's rated A- or better, with a $47 billion portfolio. In the end, the upshot of it all is that it's a globally diverse portfolio with many sources of revenue that essentially reduces risk and provides stability to cash flow through a cycle. Essentially, with the global footprint across so many different industries, the company has very good operational intelligence, and as I said, has a long-term contrarian philosophy of basically buying assets that are generally out of favor, and buying them at good prices. As I mentioned, the company is ridiculously cheap. It's trading on 11 times this year's earnings and 7 times cash flow. On our work, it's valued at $45.50 a share, 40% upside on the current share price, and also basically builds further diversity into our portfolio, which again, as I said, is nicely balanced between participating strongly to the upside and providing defense to the downside. So as I mentioned, we currently have only one cyclical in the portfolio, being Shell, and obviously the oil price is being supported by the current situation, and then thereafter the portfolio is very much driven by stocks that have good pricing power, and basically have the ability to generate their own growth with very low economic sensitivity. So anyway, at the moment, we're very happy with the way the portfolio is positioned, and I will be happy to provide you an update in a few weeks for the October numbers. Contact details are on the bottom right of the slide for myself and for Tony. Please, any questions, please either email or contact us by phone. And again, we're very thankful and happy for the support that you've given our product on the Shartru MDA. Thank you very much.